In this week's Market Minutes, I'm going to look at when is the right time to buy at stock support, plus provide my regular weekly market analysis and look at the trade of the week on OSTK. All right, so when should we buy at support? Well, let's first begin with a definition of what support is. Support is a floor price from the past where the stock or market stopped going down and started to go up. It's that price that the market has said, we don't believe the fundamentals are worth anything less than this price. Now, when price falls into support, it will typically bounce higher in the short term. However, when price goes sideways at support and then breaks down below it, it will typically move down further. So the right time to buy at support is when prices are falling steadily before hitting support, as they will usually move up from that price level. And let's take a look at the chart of the S&P 500 on a 30-day, 30-minute basis. And I've drawn two lines of support on here. The first is very short-term support from last week, which had held up a couple of days. And then on Friday morning, we had a gap down into that support level and the market bounced up from that price level because it had fallen into it. We're now very near to the longer term support that the market made back in October. And so if we were to fall into that support level early this week, we would expect it to bounce as well. However, what you always have to keep in mind is that if the market goes sideways at support for some time, and then breaks down below it, we typically get a downward trend. So here, for example, we had support over there and we broke down through it, and that's what started the next leg of the downward trend. So that's two ideas to keep in mind when you are looking at support and whether you should be a buyer or a seller at that price level. All right, let's get into this week's market analysis, starting off with the US markets. Here is that chart of the S&P 500 again, this time the 30-day, 60-minute. And as I spoke earlier, you can see that the market bounced off of very short-term support on Friday, but then at the end of the day, it fell off into the close, and that's why we had those red candles at the close. And that makes me think we are in for some more weakness near term. However, hopefully we'll hold that 262 level. I think we may move down into it, perhaps even go below during the day, but then come back to hold that support level. And what the market could probably use is some strong panic selling, maybe even taking prices down into the 260 level and then bouncing back from it as a sign that the buyers are interested in acting again. The reality, however, is that in the short term, we have falling tops on the S&P 500, and that means investors are pessimistic. Looking at that longer term chart, of course, we had the long-term upward trend line broken a few weeks ago, and we bounced up a little bit, and now we're rolling over again, which is what you would expect to have happen. The question is, are we going to hold this area of support, which is more or less where the monthly trend line is that we've spoken about a number of times. And so the market's at a real critical point, because if we have a very strong sell-off week and we end up closing below that 260 level, we will have broken the monthly upward trend line, and that would point to more weakness. My sense is most likely what we're going to have happen is what happened back in March and February, where we had that sort of double bounce off of support there, and then we ended up resuming the upward trend. The pattern right now is very similar. We had a sell-off, a bounce, a second sell-off. Here we've had a sell-off, a bounce, and now we're getting the second sell-off. The question is, will we hold that 260 level? Looking at the Russell 2000, this is the weekly chart for the Russell 2000, and again, that long-term upward trend line was broken, and that points to, really some sideways trading action at best and possibly further weakness. There's support right here at 145. If we can close the week below 145, then we're probably headed lower still. Onto the Canadian markets. I always like to start off with the TSX 60 short-term chart, 30-day, 60-minute in this instance. And we had some selling pressure at the end of the week. Of course, the markets in Canada were open Thursday and all day Friday, whereas we had a shortened session for the US markets on Friday, and those markets were closed on Thursday. But the result is pretty much the same. We've had selling pressure going into the end of the week, and that brings us near this support zone and below resistance. The general bias is negative as we have falling tops, so again, investors look relatively pessimistic, and until we can break the downward trend line, investors should be cautious. Looking at the longer term chart on the TSX 60, we've got that strong long-term support there that is held up on a number of occasions, but we're testing it again, and if we were to get a sharp move down below it, we are destined for some lower prices. However, price has fallen into support, and so we would expect it to bounce. We just need to see some conviction among the buyers to take away some of those fears. TSX Venture really looks pretty ugly and has for some time. It tried to bounce back when it broke the little downward trend line there. That has failed. The sellers are in control, a little bit oversold, I would say, perhaps due for a bounce back, and perhaps the cannabis sector, which has been a leader when the market was moving higher and really a leader as the market has moved lower in the last number of months, looking a bit like it wants to try and bounce back from being oversold, and perhaps that will give this market some support near term. But until I see some buyer support and actually upticking in this market, I would be pretty cautious with the Canadian small cap and micro cap stocks. On to currencies, US dollar resumed its strength last week. It closed above its open. We're in that upward trend, upward sloping channel, and that points to higher prices ahead. Until the upward trend line can be broken, I would say remain bullish of the US dollar. I'll draw that a little better. It looks more like that. And so for now, the buyers are in control of the US dollar. Canadian dollar trying to hold its support level. It's a theme we have this week. Lots of testing of support right now. There is support on the Canadian dollar. We bounced back a little bit from some weakness early in the week, but still the pattern is pessimism because we have falling tops, and that means the sellers are in control of the Canadian dollar, and that is a sign of future weakness unless that downward trend line can be broken. On to interest rates. Of course, interest rates important for the market, and the 20-year bond ETF chart moved up over the last 3 weeks. That means interest rates have moved down a little bit over the last 3 weeks. However, the cycle of pessimism, of downward action in the bond market remains. We could come back all the way up into here and then move lower again. I still think longer term the outlook is for higher rates and lower bond prices. Commodities. Gold has continued to show some stability. It has support there, broke that resistance level, now trying to build a rising bottom. If we can break out through the 117 level on the GLD on the weekly chart, we may actually see some strength in gold and gold stocks, which have really not been my favorite for a very long time, but there is starting to build a little bit of optimism. I think there's lots of work to be done, but something to keep an eye out for. Oil market really heavily oversold. We've had this precipitous downward move, blew through this support this week, and it's really a falling knife. I think really no strong support until down at that price level on the USO. And so if you are an oil investor, don't try to catch the falling knife. Wait for some stability, wait for some rising bottoms to build before you try to jump in front of this bear market train. So my outlook then, US stocks neutral long-term still, but we got to be very cautious if that monthly trend line gets broken. Bearish short-term. Canadian stocks, same thing, neutral long-term, bearish short-term. Gold, neutral long-term and neutral short-term as it's attempting to stabilize and perhaps break out in the future from a rising bottom. Oil bearish on both time frames to the point that it's becoming almost a panic in the oil price market, and that's usually a sign of irrational behavior, but it can be irrational for a while, so don't jump in front of it until it starts to stabilize. Investors still want to sell into any strength in equities, and that implies the market needs another round of emotional selling to shake the tree and bring on some panic. Until the downward trend is broken, I suggest remaining pessimistic of stocks. Oil is oversold, but it's really showing no signs of bottoming. Gold's stable, but it needs that catalyst, that breakout, to bring the buyers back. All right, taking a look at the trade of the week on OSTK. Friday was a shortened trading session. I was not that optimistic that we'd get some good moves, and yet we did here. OSTK triggering my action candle on the second candle of the day. You can see the little pink dot right there. And the volume was increasing all morning, despite the fact that it was a holiday trading session for the most part. This one moved quite nicely. Markets closed at 1 o'clock, so really we ended the day there at around 7 to 1 RR, great day trade on a day that was not really that tradable given the lack of liquidity in shortened trading session. Well, that has been the Stockscores Market Minutes for November 26, 2019. I hope that you've enjoyed it. If so, click on that like button, subscribe to the channel, and most importantly, trade well.